All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and the stock market's going insane. Today was insane. Another crazy day. We almost hit a new low of the year. It was actually pretty wild, even with the bond market close. I go back on stream this morning. I thought it was going to be a lot more chill because bonds were closed, but no. The problems with the UK and what we brought up yesterday, that 30-year gilt, that was not good. And then things got a little bit weird throughout the day. I mean, we had our own theory with it. I think I'm going to start with it. But here was today. As you can see, we were going in there. We broke below 358. We were going to go to that 357.25. That was the last low we set 2 weeks ago. And then we bounced up a little bit. We caught it. It was a nice bottom tick. But then that crazy pop that we have circled, it's actually very, very wild. So there was a headline that came out, and we said this during the stream. My theory was that it was all algo driven, and I even said it was BS right off the bat, but this headline came through as a Reuters one, and they changed it about 10 minutes or 8 minutes there. As you can see, I didn't even refresh my page, but this is the watered down headline. But essentially, it seemed like there was a little bit of an algo reaction, because I'm telling you, the futures, people bought it up, and I think it was because of that line about Russia being open for democracy. But now this is where it gets good. If you believe that, and I believe it, but that would be a very, very small few of people today who believe that. And what they are attributing this bounce to is Lael Brainard. But now this is where it gets better. We were listening to Lael Brainard when it all came out, and I even said, I was like, she's not saying anything new. And I was like, I don't know, I don't get what it was. Apparently, she offered an olive branch for the doves and said that the risks could be two-sided and was kind of warning about the Fed over tightening. But here it is on that same low 2 weeks ago, September 30th. She said the exact same thing. So I think all of it's BS. I don't know. It's up to you. We'll see. But it was a very wild pop. And as you can see, ever since that, towards the end of the day, we didn't do much. So there's a lot more we have to talk about. And this just solidified how important this Thursday and the CPI is going to be. But all in all, it was a crazy day. And it's just kind of highlighting the volatility you're in and what we are dealing with. So we have a lot to talk about. I got the breakdown, what we're looking for the rest of the week, the plays and all of that good stuff. So you got to come with the likes, baby. Okay, I don't know how I got into this. I was supposed to tell you, go to youtube.com/the stock market. We're live Monday through Friday, 30 minutes before open. It's free. We have a lot of fast news. We do some trades. I don't even know. We don't have any advertisements, and maybe that could say something. I don't know. But if you're watching, I mean, you're already in right now. Like you are. Okay, anyways, run it, baby.
Working to the couch, it's the joints on the legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, off that bat, ladies and gentlemen, for real, today was wild. And like I said, with the bond market closed, it was very surprising that we saw what we saw, but it seems like that could have been attributed to the UK gilts. Now, before we talk about that, the first key I want to bring up is that this is not like last week. Remember, last week was the week that we opened up after hitting a low, right? We hit that brand new low, then we opened up on Monday, then we bounced up the next 2 days before giving it all back to that Friday that you just had, which is now leading into here today. So it's just not like that last week. I mean, the difference is you had a down Friday, down Monday. The buy the dip wasn't really there. The VIX is creeping up. I'm telling you, that little move we saw on the SPY, whatever the reason was, it definitely helped kill it. And that's something to keep in mind. We've been bringing up everything with the pivot rumors. And if you don't realize it, if people believe that Lael Brainard is the one that caused that move, those pivot rumors are really, really alive and well. And we said it on stream. Just watch out this week by the end of the CPI. If it does bring the VIX above 40, then maybe we could talk about it. But till then, I mean, everybody's acting a little bit crazy. But like I'm saying, the momentum was not this like buy the dip mentality. It was just a lot different than last week. And we've been bringing up that May 9th, May 10th, but now as we move forward in the next couple of days, it may not start looking like May. So in May, it tested a little bit lower, and that's where I'm getting this idea that we're probably going to see some volatile candles over the next few days. And I mean, that's what we saw today, and I do believe it. But now as we move forward, really just tomorrow and then the next day, it's going to be kind of no man's land, but really everything is going to be all about the data. So the bonds will open up tomorrow, and maybe that'll free up some things. Again, we saw a lot of downside momentum today. It was getting a little bit scary there. I mean, we could have hit a brand new yearly low and gone through there. And another thing to keep in mind, we brought this up a couple weeks ago, but on the SPX 3588, that is the 200-week moving average. And any time in history we fell below that, if you do break it, it's either a big bounce, or if it breaks, it's about like 30 to 40% more down there. So like I'm saying, we had a lot of downside pressure. We'll see how this plays out over the next couple of days. But when it's all said and done, doesn't matter if you test really low, go really high. All of that on Thursday will change. And again, today just highlighted how important that is going to be. So that is key number one. Then key number two, baby, we're not going to get any real data up until Wednesday. So tomorrow, there's only a couple of things. They're not going to be market moving data. That's why we got to keep watching those factors like the yen and especially the gilts and the pounds. But as far as data on Wednesday, then you're going to get the PPI. That'll be the only inflation pricing related things that can move stuff. And then again, Wednesday, you're also going to get the minutes. And then Thursday, again, no matter what happens, even with the minutes or PPI, all that matters is going to be that CPI. But besides that, like I'm saying, and like it's up here, this was part of the drama today. It was big. Those gilts, the 30-year kept climbing back towards 5. So here it is. It's at a dangerous zone. Like we said, keep watch for it. But the difference about today, the market was pretty sensitive towards it. I was actually surprised to see everybody, talking about this by middle of the day. The point is that pressure from a couple weeks ago, it is returning, and that's where now the pound and those currencies and all that stuff is going to be important. But coming into the last key, I've already said it many, many times, and I want to make it clear one more time. Nothing matters until the CPI. However, the next word that should be on your mind is earnings, because after CPI, it will cause up or down. But remember, bank stocks this Friday, and then the earnings comes in. And then it gets crazy, baby. But don't forget, there's opportunities everywhere. But that's everything. We'll see what happens. Watch out for the data. Keep your head in the game. And don't get fooled. It's crazy out there. But let us get into the plays. So, right off the bat, we made a lot of day trades. Actually, not a lot, but we hit them very, very well. Those were very, very great trades. We're going to go over those, but let's start with the first three here. I'm going to go with number one, and I want to bring this one up. I have some plays. Remember, we closed out the Yang. Apparently, I had an old JD. I forgot we picked those up, but Baba is play number one, so it might be time. They are here at this low. Maybe they crack, but the thing is, they are lagging behind Yang and a couple of other China names. So there's I believe it was JD or Baidu, but they're already breaking below their lows and kind of flushing a little bit. It does remind me a lot of the beginning of 2021 or even this year, if you remember. And even Yang is coming up to a high, and then Baba is just staying pinned. So I like it, but why I'm bringing this up is chances are, depending what happens after Thursday, the dollar, the CPI, all of that, you may start hearing about the yuan come up a lot more in this whole currency debacle. They were on that golden week. They were calmed down. That's why I said I covered the Yang, but maybe we should have got back into it. We got a little bit of exposure, but I'm going to be looking at Baba for the shares to the downside, and we'll see what happens. But I don't have a play on it now, but overall, especially if we start hearing more things out of China, I really think this could be a good one. So watch out for that. That is play number one. Then play number two, baby. You've heard it before. Arch. And I say it correctly this time. Arch, 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 arch. But with all of the tensions coming back and then also leading into winter again, we talked about it yesterday over the weekend with the whole Ukrainian thing. We brought up DFAN and some of that, but we also said maybe wheat will get a run. And sure enough, people were worried about that. Wheat started running, and then a lot of other plays, even MOS, NTR, again, coal was up. They started going up there. So I still have the shares. I think we're up maybe $50 or something on it, but I'm even thinking I may, if it comes down, I'll average down, but I may may even want to add a little bit more. At the very least, I'm going to watch these names again, NTR, even wheat and MOS. Just watch how they play there. But even then, coal, as it relates to energy and all that, we have been bringing that up. But I like it in the fact that it hasn't moved too much above or below now. We did go down on it, so there is a little bit of downside risk that scares me. But the fact that all this is going on and now it's kind of holding, I'm kind of tempted to get in a little bit more, so we will see. But that is play number 2, and then play number 3, baby. Oh, if you were on stream, we kept bringing this one up. Microsoft, and I think it could be the elephant in the room, and I don't know really what I mean by that, but they decided to lead the way down today, and just like they broke from their 2021 level, or it looks like they're the ones that want to lead the way down here, and that's what I'm saying. They're a big company. They've held a lot of gains. There's a lot of meat on the bone. They've been getting affected by the chips and all of that. I don't want to say they're going to be the one that get affected by the Grim Reaper, but again, today, and watching them lead, that was a little bit odd, especially with Apple not really moving much. And again, I kind of think Microsoft's a little better, so gonna keep my eye out for them. But again, I don't have a play on it, but whatever we get from here, just keep in mind earnings, and I think Microsoft earnings, it might be key, so we'll see what happens. But those are the main plays. As far as everything else, let's go over the trades that we made today. I actually started by shorting 100 shares of Apple. Remember, I came into this, I pretty much don't have too much upside except for the Nvidias, but I was just saying it, I brought it up on the watch list yesterday. I like Apple related to the NQ, and it just didn't look like it was moving, so I grabbed 50 shares at around 140, and I definitely plan on adding more depending on how it moves, but we're gonna ride that one out this week. And then before taking any trades, I had this old TOT. I brought it up. It's weird, it's been in my account, and the cost basis said it was like really high, but I looked at the option chain and it was low. But pretty much we've held this for a long time. It's pretty much saying a 40% move on TLT. We caught most of it. I wasn't liking the options. I see the premiums up, and bonds have already moved crazy over the last 4 days, so I took profits on this. I got about $3,000 off of it. Again, I've held it for a very, very long time here, but thought it might be time, especially with crazy data by Thursday. And then I grabbed the NQ, and this is what I said today. I'm not bullish, but I only really wanted to buy the upside. I have that downside to MYM. We took a lot of profits on the upside, and I was thinking for the flips, I don't want to get trapped on a short this low, so I'm thinking really mainly upside, and that was kind of the strategy. I waited till we sold off. Again, we waited the full first hour just around there to make the first trade, but I grabbed the NQ at 10,996. I flipped it for 11,021. I got about like 475. I think I could have made max like 600, and then it really kept running, and then that one was crazy, but closed out of that. I also added a MNQ. I did a mini NASDAQ to the upside at 10,988, and then we had another low there, and I grabbed another NASDAQ at 10,892, flipped it to 10,97. That one would have been good if we held it. And then that rumor news came in. I said, you know what? It's the same price as my other one. Let's go double to the upside. Again, I had no upside leading into this week, so I figured this is one of the lower points. I'd rather be upside than short on the NASDAQ 10.9 on the futures, so went up for that, and that is what I'm still holding. But realized about $975 on the future, so not too bad. Took those other profits, and then still holding some of these others. So now here are the rest of the holdings. There's that big ES. Remember, I don't have any futures active, but I have an option, so that one's down $730 now. Remember, that's my upside insurance till the end of the month. And then the MNQ, I'm up $5, and those are the two trades. Those are just what we open here today. There's the MYM, and as I was opening some of these, or as I even opened those dip buys, I was going positive on this, so this is one to watch. Remember, this is from a couple weeks ago, but I'm still holding those. We're down 400 on that. Then the NQ, that one just up there, didn't close out. And then there's the Apple shares after the end of today. I'm down $23. Then ACAM, that's the upside. I'm down $2,600 now. That means we're down what, like maybe $4 or $5 a share off of 500 shares. But I'm gonna hold this till the end of November. If it does go down, it'll be unfortunate. It'll suck to watch it go down, but I'm thinking if we get any sort of upside, I'm figuring this is gonna take it with it. Like we said, earnings and other stuff could be bad with it, but I have a different plan in mind, or hoping that we get the buyout, or that it's just gonna run up if we do get a run up. So that's one of the upside plays. And then there's the DFN, again, still holding the arch. They're barely up. The UNG and Boyle, they're down, and we talked about this today. I wanted to grab it today. It was at that last price at 22, but it wasn't a gap down today. It was a gap up that turned into a sell-off, and I was like, well, maybe it could get a little crazy. I really just want to buy the gap downs and call it a day. I've had very, very good success with that, and that's what I'm waiting on, but still holding those. We're down on those. The Adobe got a little bit worse, and then the pound play, that one I'm only down like 100. I think we were almost down. We were only down 50 bucks on that and still riding that, and I think that one is going to be a very active volatility play after what we saw today. But those are the main plays. Again, even covered a little bit. I'm probably going to be watching UNG and those gas plays again. I really like the arch, and I think playing some of these trades until we get an idea of the data or direction. But that data and Thursday, Friday, and I'm telling you, even earnings and then Powell, it's going to be exciting. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need that helmet shining. Oh, I need you to go in 1997 Honda Prelude mode. I need you to have that slip-in transmission and get it stuck in drive. I need you to wake up excited. I need you to bring the energy. You don't even have to, bro, you can have boogers in your eyes, straight up taking a dump right before the bell, bro. You don't have to be crazy, bro. You hear me? I got voice cracks and crazy. Bro, you hear me in the morning. I'm just saying, gotta be focused. You see what I'm saying? So bring it, Chad. Bring the hype. Get ready, bro. I'm telling you, you're living through history. And people say, why are you excited? Why? I'm not excited. It's what I come with every day. That's what you got to realize. Both sides, opportunity. I am not scared of anything, and neither should you. Why? Because if anything happens, things are just going to get different. Don't let that fear beep get to you. You know what I'm saying? Don't let them hit you with... They don't feel me, bro. Chad, they don't feel it. So, Chad, I hope you're ready for it. God bless you. You already know you're ready for this. You see this horn? That's old school, baby. That's old school. We got to bring it. That's the hype. I was wearing this today. I had no idea. Why am I doing the Trump hands? Yeah, I'm here. Okay, I got to go, Chad. Bye. Good day. Good morning.